Hi everyone, thank you for tuning into this webinar, which is Stock Trading Basics. We have 23, 24 now people on the webinar. Just FYI, I have muted everyone's mic because I am recording this session. I plan to put it on YouTube, so you guys can refer to it down the track, or I don't have to repeat myself when I am having the conversation with someone else. I aim to cover all the basics of stock trading, how to, there are a lot of, let's call it lingo, there are a lot of keywords that you have to understand. Without them, it's not possible to have a meaningful conversation about strategies and different ways of trading. First things first, a disclaimer. This is not a financial advice. I am not a financial advisor. You should consider your situation, consult a financial advisor before making any investments. Okay, now that out of the way, I've put this chart on the screen on purpose. I remember seeing something like this a few years back, and I didn't even know where to begin trying to understand what it's trying to tell me. Probably the only thing I understood on this chart was the time stamp at the bottom. Everything else looks like just red and green, up and down. Wouldn't be able to take much information out of it a few years back. Now, don't be overwhelmed. We will cover everything and how it works, what's the purpose. The chart tells you so much, so much. Actually, chart tells you everything, almost everything you need to know about the which way it's going. And to make money, that's all you need to know, which way it's going to go. It tells you market sentiment. It tells you how the company is doing at the moment, as well as in the past, and what it's likely to do in short term. When I say short term, we'll come to this. See the green and red bars? They are called candlestick diagram. So we'll come to candlesticks and what they tell you. But I don't want to jump straight to that. I really want to take it very basic, almost like telling a story to a child. So some of you who have been trading for a while may find it a bit slow, but for everyone else's benefit, I do need to take it very slow, very basic. So now some of the keywords that you may hear, or at least you will be able to understand by the end of this session, are what is long, short, candlestick I just mentioned, bid, ask, trigger, rally, pullback, slippage, limit, stop loss. These are the some of the things I intend to cover. I'm not used to doing presentation style sort of sessions. I'm more used to having one-on-one conversation, so I can assess how the other person is absorbing information. So this one is a little bit unstructured. I'll go as I go. If I'm off the topic, please put it in the chat and I'll come back on the topic. But I'll try to keep it basic and try to cover almost everything that I aim to in this session. Now, let's start with a very basic understanding of what is stock market. Any market is a common place where they facilitate or help a buyer and a seller come together. Now, it could be bonds market, it could be stock market, it could be cryptocurrency market, foreign exchange market, derivatives market. Don't worry about those words, but basically market is where buyer and seller come together. There is also something called CFD, but all you need to know about CFD right now is stay away from it. Don't worry about it until we finish what we need to cover. What I also found is everything someone needs to know about how to start trading stock market, it's the information's everywhere. It's on a lot of forums, a lot of blogs, a lot of YouTube videos, Google pages. There is tons of information there. But what I find it's lacking is the structure. Now, that's not where I come in. I'm not great at structuring these sort of content. I've never done it, but this is my attempt to keep it very basic, to give you guys enough understanding of the keywords, how it works, so that you can then go and explore the other content that is out there and make sense out of it. I haven't really gone through any training courses or anything. I have really learned from experience. Everything is by experience, by making mistake, by losing money, by making money. That's how I learn, and that's, in my opinion, the best way to learn. I may split this whole session into few lessons. I want to keep it in the chunk of 15-20 minutes to keep it very focused. But yeah, we'll probably take a short break after 20 minutes, and then depending on your appetite, we may continue or we may park it for another day. Um, Now I'll put I don't, sorry, give me a second. Um, so trading in general is, as I said, forget CFD. Trading, simple trading is buy low, sell high. Buy something at $5, sell it at $5.01, right? So this can be a great side hustle. You can spend an extra hour in a day and get a few $100 if you know what you're doing. Or as you get better, spend an extra 5 minutes a day and get $1,000 or thousands of dollars. This is very much doable, trust me. Not on day one, so don't expect to start making money from tomorrow. Maybe not in a month, because I will strongly encourage you all to do paper trade. We'll come to it in the end, but it is definitely doable. It all depends on your commitment, the amount of effort you put in. There are, I believe, millions of people out there who are making money every day in stock market, whether it's their full-time gig or side hustle. So I do want to encourage everyone to invest your time in learning this. Um, there's something called technical analysis. So pretty much what you see on the screen here, this is all part of, see the colorful lines other than the red and green, this channel going through these graphs here, MACD, the RSI, it's all part of technical analysis. In the early days, I didn't see any point to technical analysis. The way I thought was, if Tesla, for example, is doing good, it's not going to wait for a certain candle to come before the share price goes up. However, down the track, I've found it is very, very important, maybe not as an investor, but as a trader, to understand the technical analysis. Now, I just touched on something, investor versus trader. Investor is, in my view, is someone who is in it for long term. Now, what's long term? It's different for everyone. But I would say if you are planning to hold the stock for a few months or a few years, that's long term. For the let's for the purpose of this exercise, let's call it long term. Short term is not investing; it's trading, where you're buying, selling, hopefully making profit on each transactions or most of the transactions. The other reason why technical analysis is so important for trading is there are so many traders out there who trade on technical analysis, and any large enough number of anything can cause significant move. Take Bitcoin, for example. If everyone's telling everyone else, hey, buy Bitcoin, it's going to shoot up. If everyone buys even $1 worth of Bitcoin, it's going to go up. So there are so many people who trade based on technical analysis, and they can cause the price to go up or down. So whether you trade based on those technical analysis or not, that is different, but you still need to understand what they mean. And we will cover that step by step. Investing and trading both have their pros and cons. I can do a whole session on just that topic. Um, Trading, there is no guarantee that you will win every time. Neither there is with investing. But trading is probably one where we work more of probability, where we see is the price more likely to go up or down, and you trade based on that. If it goes in that direction for a trader, you book profit. If it doesn't go in that direction for a trader, you quickly cut your loss and get out of the trade on a minimal loss. Now, there are different strategies that has different scale of risk. So we will cover all that down the track as well. But just so you know, it is not like putting a money on a roulette wheel where if you buy a $50 worth of shares, it may be 25 tomorrow or it may be zero tomorrow. No, you can trade those $50 in a way that you will not lose more than, let's say, $5 on that trade. So it all depends on how you structure your strategy. Um, what I do is not just obviously invest in stocks. I spread my investment across residential and commercial real estate. That's my favorite. It is real estate. You can touch it. Stock investing and trading, both. I've had retail businesses in the past. I have online businesses. Now, whatever I do it with commitment. I produce results big enough to satisfy myself more than anyone else or anything else. Now, with that, let's come straight to the first topic that I want to cover, which is order types. Now, if you want to buy the share that you see on your screen now, which is ZIP, it's a buy now, pay later company. Um, See this here? And the market is closed, obviously, but the last price it traded was 6.635. Now, pretend the market's open right now, and that's the current rate. There are different types of order you can put in to buy those shares. The first and most commonly used by newcomers is market order. Market order is a way of communicating to the order that you are interested in buying or selling a product, not just the stocks, all the other investments that I mentioned before, at whatever current market value is. You can only buy shares if someone is selling them. The broker is really a broker, if you understand the term, but is really only facilitating the talk between buyer and seller. If you want to, on the other side, if you want to sell, you are only going to be able to sell if there is a buyer on the other end. So it works both ways. The price fluctuates so much that you can't say that I want to buy 1,000 shares at 6.635 because the sellers may not have that many shares that they are holding and selling. You may have a bunch of sellers who have 300 shares. Some may have 200, some may have 1,000, we don't know. But basically, mix and match all of those. You get your 1,000. And what is the average of those purchase price is your purchase price for 1,000 shares. Now that's a market order. Market order is essentially saying, give me 1,000 shares, whatever best price you can get in the current market order. There is something called slippage. Slippage means you wanted to buy share at market or whatever bid price, but it did not get filled at that price. It got filled at a slightly different price. So as I said, you wanted to buy 1,000 shares at 6.635 because you think that's the current market price. But by the time your last bunch of 200 shares are filled, it may have gone up to 6.7. And then your total price for the 1,000 shares is the average of those. The difference is usually in cents. It's not in terms of percentage, it's not huge. So don't pay too much attention to that. But this is just so you know, the first very basic type of order is market order. The execution basically cannot guarantee a price on that one. Now, The availability of buyers and seller that I mentioned is referred to as liquidity in the market. Now, okay, what is liquidity market? Liquid market with a lot of liquidity, and why it is so important. Now, one of my strategy is called scalping, and that is to take advantage of minorest move. I'm talking 3 cent move per share. But if you buy large enough quantity, then you can make good return on them. It works great for me, but you need to ensure there is liquidity in the market or you get stuck. Now, let me give you an example. I can if I buy 10 shares at 6.7, forget brokerage, I'll cover brokerage in a second. So if I buy 10 shares at 6.7 and the price goes up 6.8, that's 10 cents, then I basically have 10 cents, 10 share, a dollar. I made a dollar on those 10 shares. I hope I haven't lost anyone on this. This is really straightforward. Buy them at 6.70, sell them at 6.80, 10 cents and 10 shares. So that's 100 cents, which is $1. So I made $1. Take another example where I buy 10,000 shares of ZIP. It only goes up 3 cents, right? Let's say around here, it only goes up 3 cents, and I sell them all. I make a lot more money than what I would have made in a dollar. The benefit, I don't have to wait for large moves, even moves like this, that's a red candle, but let's say even moves like this or this can get you significant amount of money. Now the issue is, if I was to sell 10,000 shares, I need to make sure there are 10,000 share buyers in the books as well. Otherwise, who am I selling it to? And the price may keep going down before I manage to sell them all. So that's why liquidity is essentially, if you imagine a physical regular market, let's say a fruit market, then liquidity is essentially how many people are standing there to buy and sell. So it's very important depending on which strategy you have for trading. Liquidity is so basically high liquidity, the tighter or lower the spreads are. Now, what's the spread? The buy and sell price is not always the same. It's going to be 1 cent apart, half a cent apart, whatever it may be, but it will be at a difference of two. Okay, so that's a spread. If you want to buy, you buy at $7.01. If you want to sell, you sell at $6.99, something along that line. The tighter the spread, the better. Um, yeah, that way there isn't a lot of gap between your buy and sell price. Some of the highly liquid stocks are your large caps. Any stock where there are a lot of interested buyers and sellers. Um, Other markets, such as let's take the forex, for example. So your euro and USD, AUD USD, yen USD, pound USD, these are very liquid markets. You always have buyers or sellers ready, so you can execute quickly. Um, what's a large cap? Did I just mention large cap? That large cap is large capital. So big companies, top big companies, where their share price may be $50, $100, $150. So big companies. Now, there is something called going short as well. I just remembered I mentioned green candle, and I was giving example of the red candle. You can actually make money by price going down as well. That's called shorting a trade. That ties back to CFD trading. You're essentially borrowing shares that you don't own. Let me give you an example. Let's say you have, let's say currently the price of strawberry in the market is $5 a box. Now you feel, let's say this is strawberry chart, yeah? The current price is $5. You feel that it's going to go down, but you don't have any strawberries. So you say, excuse me, can I borrow your strawberry? And I will return it back to you. Current price is $5. The borrowed strawberry you sell to the market to someone else at $5. And then next day, the price goes down to, let's say, $2. You go to market, buy it from someone at $2 and give me the strawberry back. So you basically borrow something you don't have, sell it at current market price, which is here. When the price goes down, you buy it back from the market and give it to whoever you borrowed it from, which is your broker. So it's an advanced concept based on where we are at right now. So let's not worry about that too much. But that's called going short on a position. Going long means you are buying and going to sell higher. Going short means you are selling and going to buy back later down the track. So this is what we call um, market order. To give you no, don't worry about that. The other type of order is limit order. This is also called a pending order, which means I will only buy if the share price becomes X. So let's say this line is the start of next day. So let's say in the morning you see that the market is falling and you feel that oh it's around here and you feel oh it could still go down. Instead of buying at 6.817, you say I feel like it will go to 6.8 at least. So let me put an order, but I will say only buy if it goes 6.18. So that's your um, bid to buy at that price. When the price, if and when the price hit that mark, 6.8, your order is filled and then you have that number of shares in your account. So that's limit order. It is only executed, as I said, when the price reach a certain price or better, right? So it can, you could fill the order at even better price if it has gone down after you put the order through. Um, Limit order is placed either above or below the current price. So limit order works for both buy and sell. Just like we bought here at 6.8, you can say, okay, now I don't have time to sit here and look at it all day long. When it goes back to say 6.85, sell it. So you can have another limit order. Limit is essentially you limiting to that price range. If it matches that price, it will go, not go, it will sell the order. Otherwise, so in this case, it wouldn't sell. It will buy because it reached 6.8, but it will not sell because it hasn't gone up. Hopefully, on Monday, it will go up, and if it crosses 6.9, which is your sell order price, it will sell. You get your profit. Now, I mentioned brokerage. What is brokerage? Brokerage is essentially your broker through whom you buy and sell, taking his commission. Now, brokerage is different, and there are so many different platforms available, starting from $5 a trade to $30 a trade. It all depends on volume. It depends on whether you're actually buying shares or you're just buying IOU note, in simple words. So let's not get into that for now. You can expect to pay, let's say, around $10 a trade. Now, a trade is on both sides. So you'll be paying whatever amount when you buy, and you will also be paying whatever amount when you sell. Down the track, I do intend to talk you guys through how to open an account in a couple of common platforms. I've already gone through this with TJ and a few others on the chat. But yeah, that is for another day. I'll keep the setup ready so I can easily share how to open an account. We will actually do it live. So we will also buy some shares. So I can show you the book, how the order got filled, at what price, what was my brokerage for that. Okay. Okay, moving along. So that is your limit order. So buy limit order is buy at or below a specified price. Sell limit order is, of course, sell at specified price or above. Now, you can also, just looking at this chart, there is another thing I want to tell you guys, which is pullback. Pullback is when an uptrend starts going down. So see this, just look at this day. See how it's an uptrend, green candle, so it's going up, up, and then red is like a drop. So there is a little bit of drop, but then again up, up. Now this, then next to red candles is what you call a pullback. Pullback is when, actually, let me see if I can, yeah, I can maybe show here. So pullback is a very simple concept, but you do need to understand what it means. So market, let's say, where's my pen? Market is going this way. Now market never goes up and down like that in a day. It's always up a bit, down a bit, and up a bit again, down a bit again, up a bit. So that is what you call an uptrend, right? So overall, it's going up, even though it had few downs. So overall, it's going up. For example, where is my screen? For example, see how there are few pullbacks, pullback, but overall, you can see it's going up. Just like the stream that I've shown here is a downtrend, even though it goes down, comes up a little, goes down, comes up a little, goes down, but overall the trend is down. So pullback is going like that, but then comes down a bit as pullback. Now pullbacks are a very important pattern to understand, because that's, if you are trading, that's when you know which way it's going to, it's likely to go. Rally, on the other hand, is this section here. Rally is when it's going up, up, and up. So it doesn't have to have a certain number of ups. This is just an example. But basically, a rally is its uptrend, pullback is downtrend. So essentially, change in trend. Covering position means buyers selling, or in short trade, sellers buying back. Forget short trades. Covering position means buyer selling. So you buy, that means you've entered the position. Let me put the other chart back on. So if I, let's say, bought around here, which is, let's say, 6.86, and then if I sell around here, 6.9, then selling is called covering position. Now, all day traders will have a set, well, all seasoned day traders will have a set price for their entry and exit and profit taking. So when I, for example, put an order through, I don't just go buy at 6.88. I say buy at 6.88, sell if it goes below, in this case, 6.82, and sell if it goes above 6.995. So how did I come up with that number? We'll cover that later. But what I'm trying to say is, given the setup, so looking at this, if I saw just these two green candles, that's the trade I would have entered. So I am limiting my loss. I'm not going to allow it to go all the way to 6.35, for example. It didn't go on that day, but have a look here. It was around 6.7, went all the way to 6.5. That's a drop. Here, even lower, 6.556. So, yeah, covering position means closing your position. If you bought, you're closing it, you're selling it, you're getting out of it. How can we use limit orders to stop loss and take profit? Exactly as I said, that you put your buy order, but you also have two of your sell order in the market at limit price. That way, only one of them can get filled. It will either go up and hit your top, or it will, which is your profit margin, or it will go down and hit your stop loss. Stop loss is no matter what happens, I will not lose more than that amount on this trade. So let's take this for example. Stop loss is extremely important. It sounds so simple, but unless you implement it properly, you can lose a lot of money. So let's go through stop loss one more time. If I was to buy share here with a hope, and this is trading, right? So with the hope that it will go up. Okay, it has had a bit of a drop, but I am expecting a rally after this, and I think it's going to go up. So I enter around here, let's say at 6.77. I enter. If I'm just looking at screen and going, okay, sideways action, up and down, up and down, up and down, by the time it gets here, I'm already in loss. Okay, so I bought around here, I'm already in loss. Now, you can't really put a setup where it will never go in negative, because as I mentioned, the way it works is up and down and up, up and down and up. So you have to have that little bit of gap underneath to allow it to go back up. Take this for example, see how strong these three green candles are, but then you have to allow for it to go a little bit down in order to go up, little bit down in order to go up. So that is your risk margin. You set your risk margin, so you have, whether it's 1 cent, 5 cent, 10 cents, depending on the setup, you put that sell order at the same time or right after you have bought the share. That way you don't end up with a huge drop. Now here, this is the next day, right? But let's say you bought somewhere around here without the stop loss. Within a minute, you're down here. You've already lost so much money. So stop loss is extremely important. Same for profit. So profit, you can still, it's not like, oh, you could have got so much profit, but you missed it. No, so it's not as bad, but stop loss is, it can be, you can lose fair bit of money, if not all your money. Not all, I mean, it's never going to go zero in most cases. But the other thing I want to show is these two lines. Now they are a bit red and get mixed with all the other red lines. But see this 6.963 and 6.41841. See these two lines? They are called support and resistance. When you look at a chart, maybe TradingView is better to show that. When you look at the chart, um, and ideally a day chart. This is not a day chart, but let's say, all right, let me zoom in a bit. Okay, so okay, more data so you can see. There are, it's not a, how do I say it? It's not a one amount that everyone sees. It's an arbitrary amount that you see as a support and resistance. So if I was to, where is my trying to, oops. If I was to draw a trend line here, this is resistance. See how the stock tries to go up here, but can't really cross this imaginary line. Comes back, tries again, can't cross. Comes back, tries again, can't cross, can't cross. This is called resistance. This is like ceiling. It can be broken. It doesn't mean it can't be broken, but it means there is a resistance, as in, as soon as it gets to that price, so many people have their sell order in place, limit sell order. As the shares get sold, the price get pushed down. It tries again, as in there are more buyers around here to get up to here, but then by the time it gets there, they are all selling, they are booking their profit, comes back here. Even stronger goes up, but people who bought around here and here and here, they are taking profits, selling it, and then pushes that back again. If and when, it depends on the buyers and the news and potential for company. When it crosses that, usually there are so many buy orders over the resistance line, over the ceiling, and it will shoot up. I'm not sure if I have any. I'll see if I can find another example on. Actually, let's see here. APT may help, but that's basically your resistance, which means it's a 1-day chart. All right, we are getting sidetracked. The other one, I'm not sure if it's the webinar, but it's slowing my PC down. Okay, so that is your resistance. See here, it went up, couldn't cross it, tried again, couldn't cross it, all the way down. There is also a support. See this line here? That means price has a lot of support at this level, and it is not easily going to go below that. Now, what that means, in other words, is there are enough buyers who thinks the stock will go up overall, that they are willing to buy here because they think that once it goes down here, it will go up. So as soon as it reaches that support, the buy orders come in and the share price goes up. Comes down, up, down, up, down, up, down, gets here, buy orders come in, goes up again. So between resistance and support, you find a lot of liquidity, a lot of people who are betting one way or the other that it will either go up or down. And that's why you have, in this case, it's not breaking the support or resistance. Just like, sorry, give me a second. Just like resistance, support works in very similar way, that once it's broken, it goes boom, boom, boom down. All right, so that's support and resistance. The other one I want to talk about is higher high and lower low. This is again a very common term. Higher high means the new high. High is, let's say the day has just started. Okay, this is the starting point. This is a higher high. Actually, no, this is just high. It went high. Then the next candle is making higher high, which means it's higher than the previous high. Now, we don't look at it candle by candle. We look at it in terms of pattern. Let me go back to TradingView. That's better to explain. Actually, let me go back to this. So, go away. All right, higher high. The graph pattern, not individual candle, but the pattern makes high, comes down, makes higher high. So this high is higher than the previous high, comes down. This is called higher low. The low point here is higher than the previous low point. This suggests upward trend. Now, this line, let's say that hasn't happened yet. Just looking at the red lines, it would seem that the chart is making higher highs and higher lows, so it is likely to go up. So you would put your buy order somewhere around here. You would have your profit, so limit sell order here, and your limit sell order here. So if what you're expecting does happen and it goes up, you get filled here and you make whatever amount there. If you are wrong And if it continues to go down, your stop loss is triggered here. You don't lose any more money than this amount. Please don't judge my trading skills based on my art skills. This is horrible. Um, but yeah, it's the charts are lagging a bit. Otherwise, I would draw here. Anyway, so that's higher high and higher low. Um, this is what we call trend, right? So what we are trying to see is the trend. Which way is the market trending? Now, it could be long term, short term, medium term. So here, see, you have different options. You can set your candles to 1 minute, as in it creates one candle for every minute, all the way up to 1 month. So how broad of a picture you want to see is up to you. But yeah, this is what you call trend, and you can see the movement in one direction, clear movement in one direction. Um, price, how does the price move? So I probably should have covered this earlier. What will cause this Flight Center Travel Group share to go from $15 to $19 or $15 to $13? Many things can impact that. It could be company's performance. It could be catalyst, so news related to company. It could be just traders trading the stock. So unlike the strawberry example I gave, which probably isn't the best example, you can people can keep farming more strawberries, and then that way there isn't really the supply and demand concept is slightly different because there is a constant supply of new strawberries in the market. Here there are set number of shares for a company until they release more, but park that for now. For simplicity of understanding, there are set number of shares. The um, buyers and sellers are just, so it's really the share is just changing hand between buyers and sellers. Now, in other words, every dollar that someone makes, someone loses that dollar, not factoring in brokerage. And every dollar someone loses, someone else makes it, both ways. So market, in my opinion, is neither good nor bad. Market is market. Depending on your strategy, either you make money from it or lose money from it yourself. Okay. Price will not move until a seller is found for a buyer or a buyer is found for a seller. So let's talk about that a little bit more, because it's important to understand what can cause this price to move up and down. So if Flight Center announces that its last year's quarterly profits were 30% more than of the previous quarter, that's a good news. That's not only good news, that's a good performance indicator as well. So that shows that the company is doing great. Um, Afterpay went to US and got tons of new clients on board. That's a good news. That will push the company's price up long term. I mean, it goes up during the day as well, but that's probably a bit more long term thing. Um, what else can push the price up and down is the number of buyers and sellers. So, for example, there was, for those of you who may have heard in the news, there is a company called GameStop or something in the US. But if enough people just buy their shares without any reason, just mass get together and they just keep buying, the price will go up. So essentially, it's just like any other product. If the demand is there, product is limited, there are no new strawberries being grown, then it's a supply and demand thing, and the price will continue to go up. Same way, if we put a panic in the market somehow that Flight Center is going to shut down tomorrow, no matter how well they are doing, if excuse me, if people start selling Flight Center, the price will go down. So, excuse me. So market moves because buy orders consume seller liquidity at a certain price point. Um, the next order will be fulfilled at a higher price point if you think about it. So if Flight Center currently is at $15 and if people just go buy, then eventually the orders will start getting filled at higher and higher prices. Um, Resistance and support come into play at that point. And that's a psychological thing. There is no actual line being drawn anywhere. It's a psychological thing, but then collectively, all the technical traders will will make an impact on that. Um, there are breakout buyers who have set their orders just above the resistance. So once it breaks, it goes. So take this for example. We can clearly see a resistance here. If I was a breakout buyer, I would put my orders just above this line. So the highest it went was 1630. I would put my order at 1635 or 36, for example. Um, and there are many of those breakout buyers. So if there are a bunch of us willing to buy around 1635, once it crosses that amount, we are all buying. Our orders are getting filled. So buy, that pushes the price up. So when the resistance breaks, the breakout buyers push the price even further. Same goes for support. If it goes below a certain support, people think since there is no further support underneath that it's going to continue to tank like this, and that's why they sell. If there are enough people selling underneath here, what happens when a lot of people sell the share? The price goes down because sellers are more compared to buyers. Now you also need to understand large players require buy orders to fill at their limit sell orders. um, I think that's enough of fundamental understanding to cover the basics again. And this session has gone way over. My time management is out of window. Um, but I can see a lot of comments in the chat. So good to know that you all are awake still and asking questions. So let me go through Q&A in a second. But just before that, buy and sell 15.05, not the same price. 5 cent is the spread. Volume we'll cover later. Candlesticks show up and down, more clear in this one. Green candlestick, actually let me see if currencies, oops, UD. I'm reading all the questions in the comments and covering them as we go. All right, so that's 5 minutes. Let's change it to 1 minute candle. Okay, a lot to cover. I'll start trading if I look at the live data. But look at this. Look at the trend just within last few hours, right? So you can see it's an uptrend. It started around here with all the ups and down, ups and down, ups and down. Overall, it's going up. So if you had identified around here, between here to here, that it looks like an uptrend, bought around here, not a scalp trader who's only trading 2 or 3 candles, but if you had bought around here, you could have comfortably sold somewhere around here. No one knows what the top is going to be, but yeah, let's just say comfortably around here. So if you identify which way it's likely to go, you can you can make some profit there. There is no guarantee. It may, if you may have entered around here, let's say it went up. If your profit was around here, it would have just missed it, start coming down, hit your stop loss, and you would have sold that on a small loss. So that can happen. That's why profit taking and right entry are, you can't underestimate those two. Right entry, if you were to enter around here, you will be, there is no point sitting there hoping it will go up, because then it's not trading, then it's just gambling, right? Might as well go to Star City or any other casino, and put some money there. You have 50% chance of doubling your money. So we will see how to identify when to enter, for your best chance. Um, Now, who's that? MJ is asking, what are these things around here? Okay, so let me right click on this. These are all the indicators available to you. Okay, these all have a purpose. These are all part of the tool set that you have in your pocket to assess the support, resistance, change, supply. This will help you come up and execute your strategy. Okay, there are some common ones. Bollinger Band is one of them. MACD, certainly you will see. RSI, you can see if the share is overbought or oversold. Volume, you would want to know what the volume is. This is, I don't know why it was off. I never have it off. Volume tells you what, so much. Um, Volume is how many people are buying or selling at that time. A spike in volume, see here, spike in volume, dip and spike in the actual price. This is not a coincidence. This is pretty much how it works, right? So red, red, red relates to this red, red, red. Green, green, green overall relates to this green, green, green. See volume, sell volume peaking here and the price dips. Buy volume peaking here, this is going to go up. Let's, I was gonna put an order, but yeah, I don't want to take it to next level just yet. Um, Higher high and lower low is also very important. You basically will never have a perfect way of knowing, oh, okay, one glimpse and you know it's going up or down the track. So you want to, there are different ways to verify whether what you think is likely to happen or not. Sorry, give me a second. I'll quickly go through account opening and trade. Yes, I mentioned that we will do that live. We can do superhero, we can do NAB, we can do ComSec, whichever. Um, uh, oh, next session. Okay, all right. Keen candidates. Next session, you guys tell me what you want to cover. We can do a live trade, and not investment, live trade where I will buy and sell. But the only challenge is, it sometimes I can sell in 2 minutes. Sometimes I have to hold it for 4 hours, 5 hours. So I don't, it may not work. Live trade may not work. I can capture my trade, cut it into, when I buy and when I sell sections, explain you why I bought it or sold it, but I think it's too early for that. So next session, maybe, look, I think in terms of fundamentals, that's what it is. If anything, I would explain more about candlesticks. Red and green is too simple. Why is there a thin line and why is there a body? What constitutes that? I would actually encourage all of you to just do a simple YouTube search on how candlestick chart works. Um, if there are any specific questions, I can then get into those. Um, Not using, sorry, just reading some more. Comment. Someone is asking, what is bearish outside reversal candle? Okay, so there are different patterns. There is a hammer candle, there is a shooting star pattern, there is bearing engulfing candle. Let's note that is definitely not for this session. Okay. Um, the keywords are in the chat. So those who want to look it up, look it up. Ask me specific questions. But definitely, we don't want to confuse everyone else. Neither do we have time to cover them. Next step. Okay, good question. What is the next step for us? What's your homework? See this? That's a demo. This is a demo account where they give you $20,000 that you cannot cash out. Open a demo account. This is called paper trading. You're not trading anything. Even if you want to, you're not trading the actual money. It's all for you to practice with. But I would encourage you to, on Monday morning at 10 o'clock, shortlist any 5 companies that you know. Okay. Um, and surely you know 5 companies that are out there. Have a look at them, see what happens at market opening. When market opens, see, this is very typical that you will see either red going down or green going up. So just observe. Paper trade is test trade. If you want to play around, click on deal if you are using IG. By the way, most of the platforms are similar, more or less. It basically lets you buy and sell. Yeah. So if you're very keen, put a deal through, see if it goes up or down, see how it feels. We will cover rally based rally, drop based drop. Market, as I said, never moves in one direction. Where is my trusty craft pad? Okay, let's use green this time. It's good to identify this, right? So rally base rally and drop base drop. This and this. This is rally, of course. Then drop to base. Then rally again. Drop to base. Rally again. So rally base rally. When you see this, so rally base rally. Forget this for now. This is, I think I already covered this. This is a good indication it will go up after this. Same with drop, base, drop is a good indication it's likely to go down again. So it's good to know you guys are asking meaningful question. Looks like not everyone is a newbie that I thought they were. Double top formation. Cover that either in the next session or see, this webinar has a time limit because I'm using the demo version, so we've got to wrap it up now. Supply and demand. So TJ wants to know more about supply and demand. The best way to go about is observe the chart. When you see green forming and going up, that means there is more demand than supply. The supply doesn't change, the number of shares don't change, but the supply, as in the number of sellers available to sell versus number of buyers willing to buy, that's your supply and demand. So if the green candles continue to go up, that's your strong demand. If the red drops like this one, that's weak demand, right? um, See, I was saying that given this green volume, it's likely to go up. It is doing that. So that's where a short-term trade, we could have entered around here. I would have put my exit just on this green line. See this green line, just at the ceiling, and oh, yeah, it will get filled. So that's it, guys and lady. We have Sonia in the group as well. Thank you very much. My My aim was to give you guys basic information, basic enough, so you know, sorry, how to trade, how to understand. Sorry, not how to trade. I'm definitely not as good at multitasking. How to understand the basics. Now there is obviously a lot more to cover, but in a nutshell, this is your uh, platform. Um, you can now, surely after this, you can now look at more videos yourself. If you don't understand anything, by all means, email me. So my email address for this channel is allwealthevenues@gmail.com. And look at TJ asking me for next session on investment property. Which one, TJ? Residential or commercial? In city or regional centers? So we'll see. But yeah, feel free to share all your comments, feedback, how I can structure this session better. Next time, I'll probably put a bit more structure to it, prepare a little bit. This one, I just winged it. Few of you, I was repeating myself over and over. So I thought better do a webinar where I cover the ground with most of you. The aim is buy low, sell high, but it's not as easy as that, of course. But it's not as hard as what we may think as well. Okay, needs a bit more discipline, understanding, like anything else. You understand what you're doing, you have more chances of succeeding at it. So, thank you very much, everyone. Have a good day and good weekend. And yeah, I'll look forward to your comments, and I'll share the link with you all. Actually, I'll share the link with 8 people I know, and you can forward to whoever else you forwarded the invite to for the YouTube video. And yeah, look, this is really just starting the conversation, right? From here on, I'll take the input from you. Whatever you would like me to share my views on, I'll share them there. If it's opening an account, if it's doing a live trade, anything. Okay. Thank you very much. Have a good one.